At 10 o'clock in the morning on a summer day in Washington, the Supreme Court delivered a ruling that, honestly, sent tremors through global markets. News tickers blared and traders gasped as stock indices fell sharply. The court had just rejected former President Donald Trump's sweeping 10% tariff policy, a plan that would have impacted every imported good entering the United States. In just a few minutes, the Dow dropped 900 points, the European stock market slumped, and Asian exchanges scrambled to respond. This was not just another legal decision, it was a real turning point for U.S. trade, presidential power, and the world economy. Investors, CEOs, and government leaders everywhere realized the playing field had just changed. The ruling answered a question that had haunted trade experts for months. Could one president unilaterally reshape America's relationship with the global economy? The stakes, honestly, could not have been higher. The Trump tariff plan had sparked debate in boardrooms, factories, and households nationwide. International partners and rivals alike watched closely, fully aware that global supply chains and economic growth hung in the balance. With just one decision, the court had determined not only a policy, but the boundaries of presidential authority for decades to come. Donald Trump's call for a universal 10% tariff became a signature part of his economic vision. He argued America was exploited by trading partners and promised a flat tax on all imports to protect U.S. industries and jobs. Every product that comes into our country will be taxed at 10%, he declared, vowing to rebuild American manufacturing and stop letting China, Europe, and Mexico take advantage of us. Supporters of Trump's 10% tariff argued it would boost American manufacturing, create jobs, and strengthen national security. Critics warned of trade wars, higher prices for families, and risks to small businesses. Economist Alicia Mendoza called it a tax on everything Americans buy. The debate quickly escalated. The legal battle over Trump's tariff authority began almost as soon as he announced the plan. The Constitution gives Congress the power to regulate international trade. However, over the decades, lawmakers have delegated some authority to the president, especially in emergencies or matters of national security. Trump's team claimed that existing laws, like Section 232 of the Trade Expansion Act, gave him broad leeway. They argued that the president could act swiftly to protect the nation's economic interests. But opponents said the 10% tariff went far beyond what Congress intended. It was not a response to a specific threat, but a sweeping, permanent shift in trade policy. Congressional leaders from both parties joined business coalitions in challenging the plan. Lawsuits quickly moved through federal courts, with lower judges split on the question of executive power. Was it constitutional for a president to bypass Congress on such a major policy? Or had Congress, by passing vague trade laws, given away too much authority? The case moved rapidly to the Supreme Court. Legal experts called it the most important trade case in generations. The court heard arguments from administration lawyers, congressional leaders, and outside experts. The central issue: should one person hold the keys to America's trade policy, or must such sweeping decisions go through Congress? On August 1, 2025, the Supreme Court issued a 6-3 decision striking down Trump's universal tariff policy. Writing for the majority, Chief Justice Elena Roberts stated that Congress alone had the constitutional authority to impose broad, permanent tariffs. The president, she wrote, could not rewrite the national economic order without clear and specific legislative approval. The court acknowledged that presidents needed flexibility in times of crisis. But the universal tariff was not a targeted emergency measure. It was, in the majority's words, a fundamental restructuring of America's relationship with the world. The justices concluded that only Congress, representing the people, could make such a sweeping change. The ruling was, honestly, both a legal and political earthquake. Within minutes, financial analysts were scrambling to update forecasts. The court's rejection of unilateral executive tariffs set a clear precedent for future presidents. It also sent a message to lawmakers: reclaim your power on major economic issues. While the justices emphasized constitutional balance, their decision had immediate real-world effects. Markets tumbled worldwide as investors tried to gauge what United States trade policy and global commerce would look like after the ruling. The Supreme Court's decision triggered instant turmoil in global financial markets. The Dow Jones Industrial Average lost 900 points in the first hour of trading. The S&P 500 and Nasdaq also plummeted, wiping out trillions in market value. In Europe, the DAX and FTSE 100 fell 4%, while Asian exchanges closed deep in the red. Currency traders rushed to buy safe haven assets. The dollar surged, while the euro and yuan tumbled. Oil and commodity prices fluctuated wildly as investors weighed the potential for new trade wars. Tech stocks, retailers, and auto manufacturers, companies deeply tied to international supply chains, were hit hardest. Economists warned that uncertainty could slow investment and hiring. Markets hate instability, and this decision leaves U.S. trade policy in limbo, said Goldman Sachs chief economist Janet Lee. Global banks predicted lower growth in the coming year as businesses reassessed their plans. Amid the panic, some saw opportunity. Exporters in Europe and Asia cheered the ruling, hoping for fewer barriers to U.S. markets. But overall, the world's reaction was one of shock, confusion, and a scramble to adjust to a new reality. Donald Trump responded swiftly. In a statement, he blasted the court for taking the side of globalists over American workers. He vowed to make trade reform a top issue in the next election and urged Congress to pass new tariff powers. The fight is not over, he declared at a press conference flanked by steelworkers. Business groups were divided. The U.S. Chamber of Commerce and the National Retail Federation welcomed the decision, saying it would prevent price hikes and supply disruptions. This protects American consumers and keeps us competitive, said Chamber CEO Thomas Rivera. However, manufacturers in industries like steel and aluminum expressed disappointment, warning of renewed foreign competition and job losses. Lawmakers reacted along partisan lines. Most Democrats hailed the ruling as a victory for constitutional checks and balances. Many Republicans sided with Trump, calling for new laws to strengthen presidential authority. International allies, including the EU, Japan, and Canada, praised the decision and urged Washington to recommit to trade cooperation. Ordinary Americans were left divided and uncertain. Some celebrated lower prices and the end of Trump's trade war. Others feared for their jobs or worried about the loss of leverage with China. The debate on Main Street mirrored the turmoil in Washington and on Wall Street. The economic fallout from the Supreme Court's decision is still unfolding. Analysts predicted short-term volatility and long-term questions about America's role in the world economy. For American families, the ruling meant relief from potential price hikes on everyday goods, from groceries to smartphones to cars. Industries that rely on imports breathed a sigh of relief. Retailers, automakers, and tech companies quickly reassured customers and investors. But the ruling also left some sectors exposed, especially those already struggling with foreign competition. Steelworkers and farmers worried about new waves of cheap imports, while exporters hoped for a more stable trading environment. Global economic forecasts remain mixed. Some economists expect a rebound as uncertainty fades. Others warn that the ruling could embolden foreign competitors and weaken U.S. leverage in trade talks. America's ability to act quickly in a crisis has been limited, said trade analyst Peter Zhang, but stability may be better for growth. The decision also set off new debates in Congress about trade reform. Lawmakers began drafting bills to clarify the balance between presidential flexibility and congressional control. The future of U.S. trade policy and America's place in the global economy remains an open question. The Supreme Court's rejection of the universal 10% tariff reshaped the American legal, political, and economic landscape. It reaffirmed Congress's authority over trade, limiting the scope of presidential power. For now, sweeping trade changes will require legislative approval, not executive order. The ruling also rekindled fierce debate about America's economic direction. Should the U.S. focus on free trade and open markets, or protect domestic industries with tough tariffs? Political divisions deepened, with trade policy emerging as a top issue for the 2026 elections. Both parties now face pressure to define their vision for America's role in the world. For businesses, families, and global partners, the decision brought both relief and uncertainty. The threat of sudden tariffs has faded, but so too has the promise of bold, unilateral action. Investors and economists are watching closely as Congress debates the next steps. As the dust settles, one question remains: can America find a balanced approach to trade that protects workers, fosters growth, and respects the limits of executive power? The answer will shape not just the next election, but the nation's economic future for years to come.